Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about COSTAR Group INC quarterly report. COSTAR Group Inc. offers a wide range of businesses and services that cater to various stakeholders in the commercial real estate industry. Some of its key offerings include property inventory management through COSTAR Property Lease Transaction, data and tools with COSTAR Leasing Commercial Real Estate Sales Transactions, database via COSTAR Sales Portfolio, information for property owners through COSTAR Owners, market trend analysis and reporting with COSTAR Markets, tenant information services through COSTAR Tenant. In addition, the company provides specialized solutions such as hotel performance benchmarking with COSTAR Benchmarking Loan, portfolio management and risk assessment tools for lenders via COSTAR Lender Real Estate, and lease management technology solutions. COSTAR Group also operates several online marketplaces and platforms, including Apartamentos.com apartment marketing, LoopNet.com commercial property marketing, Homes.com homes for sale listings, 10x online auction platform for commercial real estate, Land.com rural land sales marketplace, BizBuySell.com operating businesses and franchises for sale. These services cater to a diverse range of clients, including sales, licensing, and mortgage brokers, property owners and managers, lenders, government agencies, investors, and real estate agents. COSTAR Group Inc.'s stock price remains steady despite volatility. Despite experiencing significant fluctuations in its stock price over the past year, COSTAR Group Inc.'s CSGP overall performance has remained relatively stable. The company's revenue growth has been consistent, with 56 consecutive quarters of double-digit increases. However, profitability and net income have been impacted by investments in new technology, marketing, sales teams, and acquisition-related costs. The Q3 2025 earnings report marked a turning point for the company, as revenue surged but profitability deteriorated, leading to a significant decline in stock price. This volatility is attributed to the company's efforts to adapt to changing market conditions and expand its offerings through strategic acquisitions and investments. While COSTAR Group has faced challenges in the competitive landscape, including legal disputes with Zillow, its strong revenue growth and expanding platform have maintained investor confidence. The company's ability to navigate these challenges and maintain stability in its stock price is a testament to its resilience and adaptability in the ever-changing real estate technology industry. The primary drivers of revenue growth for a company are largely attributed to strategic acquisitions and increased sales. The Matterport acquisition contributed significantly, with revenues totaling $104 million, while the domain acquisition added $62 million. Visual Lease acquisition also played a role with $25 million in revenue. Additionally, COSTAR sales experienced growth due to inflation-based price increases on renewals and increased subscribers, generating $110 million. LoopNet revenues rose due to an increase in listings and average price per listing, adding $23 million. On the other hand, the primary drivers of revenue decline are primarily related to interest income and foreign currency fluctuations. A 41% decrease in interest income, totaling $68 million, was largely due to a decrease in cash equivalents. Furthermore, exchange rate changes also had an impact on revenues, with some currencies experiencing a 10% strengthening or weakening against the US dollar. Net income and profit margins decline. A shift in financial performance. The financial summary reveals a significant decline in net income and profit margins for the company. Net income decreased by $118.4 million, dropping from $53 million to minus $30.9 million. This decrease is also reflected in net income per share, which fell from $0.13 to minus $1.07. Profit margins suffered a substantial drop, decreasing from 7.7% in 2024 to minus 3.7% in 2025. Although the gross profit margin increased, operating expense and net income margins declined. The effective tax rate also decreased from 37% in 2024 to 28% in 2025. The reasons behind this decline are unclear, with no specific explanation provided. However, stock-based compensation expenses may have contributed to the fluctuations due to varying estimates of performance conditions. The company's financial performance indicates a strong ability to generate cash from its core operations, with net cash provided by operating activities reaching $268 million in the first 9 months of 2025, it is clear that the business is producing positive operating cash flow. This trend suggests that the company has a solid foundation for future growth and stability. The company's debt level and interest expenses have shown mixed signals over the past year. While long-term debt has increased by only $1 million, total liabilities have surged by $492.7 million. This discrepancy suggests that the company may be taking on more debt in various forms. On the other hand, lease income has decreased significantly, which could indicate a reduction in interest expenses. However, interest paid remains relatively unchanged at $29.5 million compared to $29.8 million the previous year. Overall, the data indicates some changes in debt level and interest expenses, but the extent of these changes is not entirely clear. The company's financial performance varied across different regions and segments. Notably, North America experienced mixed results, with revenue growth of 15%, but a significant decline in EBITDA by 48%. In contrast, the international segment showed strong revenue growth of 35%, although it struggled with EBITDA losses that worsened over time. Overall, while some areas demonstrated resilience, others faced challenges that impacted profitability. Management is optimistic about the company's outlook, citing several key strategies to drive growth. The company expects synergies from combining Matterport's operations with its own, and plans to continue investing in business and services, including developing new products and expanding online marketplace solutions. The company also anticipates revenue growth in certain segments due to acquisitions, while moderating in others. To achieve this, management will focus on repurchasing shares, attracting new clients, and navigating global economic uncertainties. Overall, the company's strategy is centered around integrating Matterport's technology with its own, expanding products internationally, and enhancing services to meet customer needs. The company has a history of buying back its own shares as part of its financial strategy. In recent years, it has made significant share repurchases, with notable transactions including the repurchase of 1.4 million shares for $115 million during the 9 months ended September 30, 2025. This indicates that the company is focused on returning value to shareholders through share buybacks rather than paying dividends. Concerns surrounding inventory buildup and supply chain disruption. The company's financial summary highlights potential issues with inventory buildup and supply chain disruptions. The total inventory's value is notably high at $6.3 million, indicating a possible accumulation of excess stock. Furthermore, several risks and uncertainties related to supply chain disruptions have been identified, including interruptions in supplier delivery, external factors beyond control, and the loss of significant suppliers or manufacturers. These concerns suggest that the company may be vulnerable to production delays, idle manufacturing facilities, and product design changes due to supplier unavailability. That concludes the financial summary for COSTAR Group Inc. Feel free to comment below, and I will be happy to answer them when possible.